Welcome everyone to the RBA Rate Statement meeting for Maverick Currencies. We are here late at night. It's actually morning time if you're on the East Coast, and we're going to do this together. Now, let's jump over and take a look at a couple of things here. First, we like to start with what the market's expecting, kind of build up a fundamental viewpoint. So expectations are that they keep rates unchanged at 3.85%. If we were to look at the trend of these rates, we can pull up the chart. And you'll notice something that we talk about often, which is that central banks go on trends. They don't want to cut rates and then raise rates and then cut rates and then raise rates. When they're in a rate hiking cycle, it goes on for a while. When they're on a rate cutting cycle, it goes on for a while. When they are holding rates, it goes on for a while. And so we have been in a rate hiking cycle. Now we're currently up to 3.85%. What does that mean in terms of the Aussie, and what does that mean towards markets expectations and so forth? Well, we have seen some data recently that would, I guess, lend itself a little bit towards maybe they could raise a little bit more aggressively. Maybe there's more potential. They're certainly not going to cut rates. The debate is whether they're going to raise them, right? So not expected to, but what if they raised to 4%? Would that be a major shock? Well, if I go back on the calendar to last week, you'll notice right here in Australia, on Tuesday of last week, whoops, I circled the wrong one. This one right here, Australia CPI year over year, 6.8% versus 6.4% forecast. So the inflation number came in a little hotter than expected. Does that push the RBA and the Royal Bank of Australia to go ahead and raise rates? Does it keep them on hold? It's going to be about the guidance. It's going to be about how the market's positioned, but there is a little bit of, I would say, potential risk towards a rate hike. It's either they hike or they stay the same. Markets expect them to stay the same, but they're certainly not cutting. We know that much. So where does that put the Aussie? Well, you can see the Aussie has accelerated. Here we're on the daily chart, and this is our Aussie basket. Now, I've mentioned this plenty of times, but it's worth repeating. I don't trade breakouts that have a lot of overhead supply. All of these people that bought Aussie at higher prices, they want their money back, and as they get back to break even, it's just overhead supply. It's potential sellers. There's sellers here and there and everywhere on this chart. So what does that mean? It doesn't mean the Aussie can't go up, but it basically means to me, I don't trust upside breakouts. If I'm going to buy it, I'm going to buy it on dips. Why? Well, look at this breakout or attempted breakout. Was that a good buy point? Not really, because we accelerated that way. How about this fake out and then we accelerated back? How about here where we started to get above some moving averages and then we went back in and then went a little higher? How about this breakout? Nope, sorry. So I just don't trust them. Well, here we had a breakout, and I have to give it credit. It's the best looking of the breakouts because at least you cleared the two hurdles of the moving averages and you've sustained it above it for a couple of days. But do I trust it enough to come and buy the momentum to the upside? I don't. If I were going to buy Aussie, I'd much rather buy it on the dip, right? You have too much overhead supply. Can it go higher? Yes. Would I much rather, if I'm interested in buying, buy the dip? Yes, absolutely. And even further to the point might be just our broader equities and overall risk-taking approach. I've mentioned this for some time. I had been bullish on equities for months right here. But I mentioned this last week that I think we're in the final stages. And I've talked about waiting for this exhaustion, waiting for this sort of parabolic move, right? We compare it to a runner of a marathon. If you run a marathon, when you see the finish line out in the distance, you sprint for that finish. It's the last ounces of energy that you have and you sprint. And that's what this parabolic curve, this exhaustion blow off top looks like. So again, do equities have to go down immediately? No, it could last a few more days, but I think we're in the final stages of this rally. I think in the short term, sure, you could go a little higher, but on an intermediate basis in the coming months, I fully expect some deeper correction happening in the S&P and in equities in general. So my leaning is towards thinking it's coming sooner rather than later. Now, does this matter towards our trade tonight? I think it could. If we look at today's price action, we fell off the highs. This long upper shadow candle, often they see further selling, right? You get a long upper shadow and you see further selling. You get a long upper shadow and you see further selling. We have that long upper shadow. It shows a failure on the part of the buyers to hold the price up. It's essentially a failed move, right? You push to new highs. Oh, sorry, we pushed all the way down and we finished poorly. It's a slap in the face. It's buyers not being able to hold the gains. They're losing their grip a little bit. So there should be a little bit of a decline starting immediately and, a couple of days sell off. If we were to look at oil prices, oil gapped higher to start this week on a surprise cut from Saudi Arabia cutting production, and yet oil that started off with a 3%, 4% upside gap finished unchanged, and energy equities finished down and so forth. So a lot of these things that tried to rally to start this week just simply failed. And that's risk off. That's, hey, let's get defensive. Are we a little early? Maybe, but it's the area that I would rather be on because I just don't trust really chasing this momentum higher. I suspect we get a couple of day pullback, and that's in essence what we're trading is saying, okay, here's the Aussie. Here it is on a 4-hour chart. Here it is on a 1-hour chart. Where do we think we're going? Well, in essence, I'm basically arguing for a day or two of give back. Give back some of these gains, come back in price, and then we'll see. It doesn't mean that this trend, this big picture trend has to be finished. If we go back to the daily chart, a couple of days worth of selling will only bring us back to kind of the breakout point, those moving averages, and should be a springboard towards another upside move as it pertains to the Aussie, as it pertains to this chart. If I were looking at what to trade against it, there were a couple of charts. I'm going to switch gears a little bit here. There were two charts that stood out to me in the shorter term. The Aussie was pretty much in an uptrend still against everything on the 1-hour chart, on the shorter term chart, except for two charts, Aussie Swiss franc and Aussie yen. Those are the only two that had reversed a little bit through today. So if I look at Aussie Swiss franc, see how it's now gone below the short-term moving averages and doing a little bear retracement. Or if I go to Aussie yen, it's very similar. These are the only two that on that hourly chart have kind of pushed below the moving averages and then seeing a little rebound maybe underneath. Now, I'm partial to Aussie yen. This is a little bit weird in that I mentioned this in the midweek last week, and I haven't traded it yet. I've been waiting for pullbacks. I didn't want to buy the upside surge in yen, not trusting it. Again, a lot of overhead supply. Well, yen has pulled back. I think Aussie has surged higher, and so now's the time. Now is the point in time, and we happen to be coming into the RBA. I want to get short Aussie yen for a trade. This is not a big, massive speculative position. In essence, I think we could trade back towards these highs around 91.90-ish. Okay. maybe even 91.95-ish, somewhere in that zone. Well, we're at 92.41. You've got 52 pips from current price. The risk on this is not very much. If we can get short somewhere around these levels, I think you can really put a stop in here fairly tight. In fact, if you wanted to just kind of go right above those highs, now maybe not above the wick, maybe you do, maybe you go above the wick, but I was looking at this 92.62 area, and I'm okay just being around that wick area. So 92.62 on the stop, and I don't know if we'll get filled. Again, we're going to wait for the announcement, and maybe there's a little burst to the downside. Let's say we get filled a little lower at 92.35, hypothetically. Well, if we get filled on this tonight, our risk in this trade is not that much. 27 pips of risk. Okay, not too bad. And again, our reward potential here is probably down to this 91.90-ish area. So let's call it 91.90 or so target. If we've got that target, that's 45 pips of potential profit. Not quite 2 to 1, but in that neighborhood. And so I like that. Again, it's going to be moving rather quickly. Now, if on the announcement, let's say that they make their announcement here in 3 minutes, and this just shoots higher. If it shoots higher, I may still come back to this idea. I may fade a reaction. We'll see. I'm not sure I'll do that. If it has energy, if it really has that burst, then I probably won't. But if I feel like this is just choppiness, just kind of a fake out move, heck, we might get short right here at 92.45, 92.43, which would improve our risk to reward because it would lessen our risk and increase our reward. But this is the type of general game plan that I would sort of be looking at in terms of expectations and such. So I usually like to snap an order to where I say, okay, I'm going to short, and you'd short however many you're comfortable with. Let's say I was going to do 4 lots or whatever my position size is. And then you could also attach bracket orders to this order. So you could say, not only am I shorting up there, my target is 91.90 and my stop is up above at 92.62. And now I've got a structured risk reward probability type of situation. So remember that our order to short at 92.35, it will execute if it's at 92.35 or higher. So if when we hit that transmit button, it at that moment is trading at 92.42, it'll fill at that price. It'll fill at anything 92.35 or above. Now, I traded the RBNZ with all of you a couple of weeks ago, I guess it was, and it was moving so fast. We had the perfect trade strategy, but it moved so darn fast, there was no way to capture it. This one, I think we'll be able to capture it, and I expect to get a better price than 92.35. I think we can execute the order and maybe get filled a little bit better. Notice how Aussie is rallying into the announcement, and I don't mind that. I'm not so sure that's going to stick, but we are currently rallying a bit into the announcement, and this could be a quick trade, winner, loser, drawer. We'll see how it works, but watch for a burst of energy right here. You'll be able to tell when that announcement hits in all likelihood. First of all, a new candle is going to start to, well, I guess we're on the hourly, it won't. But you'll see a burst here. If I were to go into a different time period, a 15-minute or something, a new candle would start right when we hit the hour or the 30-minute mark. And, oh, by the way, if and when that happens and that new candle forms, it doesn't mean that the announcement has been released. Sometimes there's a few seconds lag. But look at the burst, okay? So, first of all, we had the wrong idea. Secondly, it had a lot of energy. So we haven't transmitted any orders, anything of that sort. Now, I still would be inclined to look at this as maybe a fade, but we'd have to redo everything. We'd basically have to redo the whole enchilada if we were going to fade this. I suspect you're going to see a long wick here in a second where it's going to give back a good portion of this gain, but we'll see about that. There was definitely energy in that move. Now I come back over to Forex Factory and just what we said. Wow, even more. Yeah, they raised by 25. So was that inflation a big deal to them? Did they go higher than the market forecast? Can you now understand why there was that energy burst? So it caught the market off guard, and Aussie burst on that move. So they raised by 25 basis points. That's a surprise rate hike. Does that deter our strategy? Not as much as maybe just the energy of this move. It burst, it had high volume, the reaction that it should have. I suspect that the risk taker could really short it here, and I'll bet you this thing falls back into 92.50 or so. You could probably capture 50 or so pips and risk 20 or so to do it, but I don't know that the probability of success is super high, and it's just hard to know here. There's just really no place to really put your stop loss and have a good concept of risk reward probability. I mean, this thing could wick right up here, hit your stop, and then go down and do that, and you're stopped out at a loss. And there just isn't a good structure, a good strategy here now that it's burst sharply higher. So maybe you'd be better served to wait and see if it has a little inside candle and then maybe pivots over and so forth. I think, unfortunately, we're just done with the idea. We just had been expecting maybe we could fade the Aussie. And with that type of surprise, they didn't even hike. I mean, they went the full 25. They could have done a 15 basis point hike and just gone to 4%, right? That wouldn't have been out of the question. They did the full 25 that took them to 4.1. So I think this is a market that probably has to price in a surprise announcement and say, okay, well, higher interest rates, higher for longer, still battling inflation. Are there more surprise hikes coming? So the energy right now is just to the upside in Aussie. And it's probably going to stay that way for a little bit longer here. We'll have to look elsewhere, I think, in terms of the structure and strategy. So I don't mind the big picture outlook of shorting Aussie. Again, I think we're going to transition to a risk-off market in the coming weeks, but we might be a little bit early to that call. The S&P, the NASDAQ, it doesn't have to turn immediately today, tonight, or anything like that. So I think these will turn, but we'll have to cross that bridge at a later date when that happens. So we'll probably leave it there. If we look at the other Aussie pairs, if you look at Aussie in general, just obviously very, very strong. Let's look at a few others. Let me pull this up. So here's Euro Aussie, and of course the big drop. These are all, if it's something listed before the Aussie. Here's Pound Aussie. Again, it'll be a big downturn that you can see there. And then we get to somewhere Aussie's listed first, so now you'll see a big jump up. Aussie against Kiwi, Aussie against US dollar, against Swiss franc, and against CAD, all sharply higher. If we come back to the daily charts, I'm not sold you can really trust these rallies in Aussie. Where did Aussie CAD go to? Well, prior breakdown point, old support, new resistance. And this is why I was saying I certainly wouldn't be buying the Aussie and chasing this upside move. My inkling would be to fade it. It's just hard to know where to get in, where to put your stop, how to avoid just the normal volatility around something like this event. But make a long story short, I still suspect that we would go lower in Aussie and that this might be the finishing touches on its recent rally. So thanks for joining us. Have a good night, and we'll see you next time. Goodbye, everyone.